let's do this. A lot of people right now are going to I promote a smart tax. Smart taxes, no hidden fees, and they are killing the game, right? And I think they're anywhere between 10 to maybe 20, $30. Don't quote me exactly. I'll put their link in the show description below. And then you also said too, if you make less money, not as much money, there's a website you can go to that actually they will volunteer help you out for free.
Exactly. So you guys should always know that the IRS does have resources for taxpayers.
Yeah.
One of those resources is actually what got me into the tax game now. It's a program called VITA.
Okay.
It stands for the Volunteer Income Tax Assistance Program. It's a free program via the IRS where they are in partnership with third-party companies to help provide tax preparation services in low-income communities.
Okay.
So depending upon where you are, you want to go and check out the irs.gov website.
Yeah.
Search for VITA and find a location that's near you because it's free
and it's 100%
and it's getting
free.
Done by a person. So you kind of feel a little bit more comfortable, I didn't have to do it myself.
Got you. So this is what I'll do. I'll make sure to drop in the show notes Smart Tax. It's they're very, very affordable. I've used them in the past before. And they've partnered it's owned by Dave Ramsey, my mentor, which is very, very solid. And then if you are in that low income community, let's say $15 for you is a stretch. Let's be honest. There are people who are doing that, who need some help. I'm gonna put VITA as well down there. I'll find that link, put it in the show description for you. So for business owners, right? Why is it important for them to have someone like you, not just for this season to just file the paperwork, but I pay you for the whole year,
right?
And she's not cheap. No, she's not.
You ain't cheap either, Anthony.
Yo, my girl is not cheap, but she ain't crazy though, because you have saved me a lot of money. Every major move that I do right now, from bringing on a new team member, from she told me how to save myself in taxes last year. I won't say what I did, but she's like, hey, you need to go do this. I have learned so much from having as a self-employed person. Because does a full-time W-2 making $60,000 a year individual need a full-time CPA like yourself?
So I wouldn't say full-time unless, again, they are triggering these schedules. So Schedule A, B, C, D, and E.
Okay.
When you're filing the 1040, which is your individual return, you typically have schedules attached to it, which separates out how you earn income or how you expense. So Schedule A is your itemizable deductions. That means you pay a lot in medical expenses, dental. You also have real estate property for your personal. So you're paying property tax, you're paying real estate taxes. That's Schedule A. Schedule B, you earn interest and dividends. So now that means you got a stock account. You got some assets somewhere.
Yeah.
Schedule C, that's specifically for a self-employed business.
Yeah.
Schedule D, that's capital gains.
Yeah.
And then Schedule E is rental. Real estate. Yes, rent and royalties.
Oh.
Yes. So once you trigger those as an individual, I would say to consult with the CPA.
If you sell a house, that's a Schedule E, or is that just a regular taxes?
So it depends on how you sold the house, right?
It's my primary house.
If it's your primary property, you now have a couple of options because you do get favorable tax treatment for having even owned your asset. They will allow you to exclude your gain, which is amazing. So imagine if you had your personal asset for 2 years out of the past 5-year period, you will now qualify for a homeowner's exclusion.
Gotcha.
So you don't have to worry about paying capital gains tax. So that's one way to avoid with real estate.
Yeah.
Another way to avoid paying a lot of taxes in real estate is to do what we call a 1031 exchange, where rather than cashing out on your investment, you take that profit, roll it into another property of equal or more value, and now you get to exclude that gain.
And that's on rental property only, right?
So
investment property.
Investment properties, exactly.
Because we tried to do that for my primary, and you was like, we can't.
We can't. So if it has to be either investment, because for your primary, your option would have been to qualify for the 2 out of 5 and exclude the amount.
I was so bummed.
But now you know the next time you own a house, let me stay for 2 years.
All right. Before we get to the self-employed people, what are 3 deductions legally and ethically that W-2 employees can write off that some tend to maybe forget about or not get advised to do?
Oh, of course, there's a bunch. Okay, so I guess I can do 3. Number 1 is your retirement savings. If you are contributing to traditional retirement accounts, you do get a tax benefit for that. Wow. So make sure you are deducting now your tax return.
Yep.
Number two, a lot of us pay for not us, I don't have kids yet, but a lot of taxpayers,
right,
have dependents, they're paying for a child and dependent care. Even if you're paying your aunt or your grandma to take care of your child, if that person is going to allow you to report their social and the amount that they're paying on your return, you can also deduct your child and dependent care expenses.
Oh, because they will pay them taxes.
Exactly, because now you're creating a transaction to where you paid the person for child and dependent care, but they're now a self-employed individual.
Oh,
exactly.
snaps.
So in this way, they get some income to report because hopefully they can deduct against it.
Right.
And then on you get to deduct the child and dependent care expenses on your return.
So you trying to tell me people who hire, like if I hired Rebecca, she's like 20 years old. She lives on my social media, right? I'm just playing. She's not 20. She's a grown woman. But if she came over to my house, watched my kids, and I gave her, let's say throughout the whole year, $1,000, I can deduct that $1,000 on my taxes as long as I report her social.
Exactly. So you'll add it into the child and dependent care worksheet where she'll add her social. She has a business because some people do have businesses for this or DBAs or EIN numbers.
Yeah.
You'll add that, the address, and how the relationship between her and the child went. And yes, it's now deduction. So your child and dependent care expenses are deductible.
Do you see why she the people CPA? Because she for the people. What? I did not know that. Okay, hit me with another one.
So another one for my teachers out there.
Don't go there.
If you are a teacher, teachers get a special above the line deduction where they can deduct the cost of, paying for supplies, pencils, pens, chalkboard as well. That above the line, I think the deduction limit is $250.
Wow.
So in that you get that regardless. So as long as you a lot of teachers that we know, they buy chalkboards, they're buying markers, they're buying stuff, they can deduct those expenses on their tax return as well.
And I know the answer to this, but I want you to say this. But again, I want to help people do things legally and ethically and not get into any trouble. A lot of people think they can write off their miles going to work.
Oh.
Yeah, like, well, I'm going to work and it's not, it is for work.
Yeah.
So, I know I've had other people filing my taxes. Tell me, well, how many miles did you drive to work this year?
Yeah.
A lot. What are you talking about? Well, we can write it off. It's for work.
Yeah.
And I was like, you know what I do, right? But that's not legal, is it?
It's not. So tax laws change, throughout the year. It always changes, especially when we have a change in government. And back in the day, it used to be an itemizable deduction for you to deduct unreimbursed expenses from you being an employee.
Yep.
So that's where
it comes
came.
from.
Exactly. But again, you choose an expert or somebody who's just doing things. An expert, because I'm a CPA, I'm required to do CE credits. So I'm learning about tax law changes.
Yeah.
They got rid of that.
They did.
Yes, 2018 TCJA Act. Right after that, no more.
No
more.
So people out here misleading people.
Yes, because you can only deduct, if you are an individual, you still can deduct charitable miles. So if you're driving to and from charitable purposes to, contribute your time, that's deductible.
Okay.
But you cannot deduct mileage unless it's now for business purposes.
Okay.
Right? So we can transition into, self-employed individuals where there's a plethora of things that you can deduct.
So let's say we have generous people who are watching right now. I have a very generous tribe. They give a lot, like to church, for their tithes, offerings. They help pay for youth pastor salaries. They give to the Boys and Girls Club. Once a year, for myself, when I was a W-2 employee, I used to actually give away like $5,000, $10,000 to homeless people to put them in a hotel for Christmas time, right? Does it look odd when you are so generous? Let's say you give away 25% of your net paid to tithe, offerings, and to just being generous. Does it look odd when you file taxes that you gave away that much money?
So no, because again, it's all personal preference. So as long as we can support the deductions, that's what we're looking for.
Okay.
The thing about donating in that way, when it's not going through a IRS recognized 501c3, is that deductibility is not equivalent.
Okay.
So in order to properly deduct, you want to make sure that you are contributing through a not-for-profit organization. And I can't even just say not-for-profit. Specifically, it has to be 501c3. Yes. This way, again, they recognize as tax exempt, so your donations are tax deductible.
Yeah. That's good. That's good because my a person who filed my taxes. Like I'm going to be careful because now since I have you, there's a difference between a CPA and someone who just files your taxes.
Exactly.
And so the person who was filing my taxes told me, because you gave it generously, we can write it off. And then when I talked to a tax advisor, he said, no, you can't.
Right.
You didn't give it to a 501c3.
C3. Exactly.
So then he told me, stop going and just putting the money into the hotel and giving them the food. Partner with the organization that is 501c3 and have them do all the work so that way you can legally write it off.
Exactly. And that's a tax planning strategy right there.
Absolutely.
That's amazing.
That's why you on my payroll.